Today, I will be showing you an amazing strategy that gives a lot of winning signals. This strategy gave me a 65% win rate within a short period of time. I recently discovered the strategy. It uses just 2 indicators, which makes it very easy and user-friendly for beginners. It works with Forex, stocks, and crypto. Since this is a 1-minute strategy, a lot of signals will be given. This makes it possible for you to grow your account at a very fast pace. We will be using a 1.5% risk-to-reward ratio. We're currently looking at the price of the USD/JPY chart on a 1-minute time frame. This strategy includes 2 free trading indicators. For the first indicator, let's search for Chain Momentum Oscillator. This indicator is made by Everget. For the second indicator, let's search for Cumulative Delta Volume. This indicator has been made by Lonesome the Blue. Let's head over the settings and make some adjustments. So we're going to double-click on the Cumulative Delta Volume indicator and change these colors to a better-looking green and the better-looking red. And for the inputs, we will leave it as it is. After that, click on the OK button. Now let's make some adjustments to the Channel Momentum Oscillator. Double-click on the indicator and change the length to 21. Go over to the style and change this to white. Then untick the max and min levels. Untick the overbought and oversold levels and change the 0 level to a straight line. Go ahead and click on the OK button to save the changes. Okay, so the chart definitely looks much better. Before we get into the trading rules, let's actually understand what these indicators are and how they work. So first of all, let's start with this Cumulative Delta Volume indicator. And by the way, this is going to be our first confirmation indicator based on its signals. We're going to place buy and sell orders if the rest of our conditions are met. This indicator is something similar to the Heikin-Ashi indicator. However, it does issue more accurate buy and sell signals during trending market conditions. This is because its measurements are based on volume. As you can see, this indicator also looks like the main chart. This is because it uses bars to calculate when there is bullish or bearish momentum in market. It would be confirming the general trend in the market. Now let me tell you what the general rules are for this strategy. The general rules are simple. If we get a green candle, it means the buyers outweighs the current sellers in the market. And if we get a red candle, there are more sellers than buyers in the current market. The second confirmation indicator we're going to be using is the Chain Momentum Oscillator. Actually, this indicator works like the relative strength indicator that we all know. However, the only difference is that we would be using it as a zero-line cross indicator. This is because we have removed the oversold and overbought areas. This will help us filter the false signals given by our main confirmation indicator. Okay, now let's actually understand the rules for the strategy. But before we get into that, we need to add the ATR-based indicator, as it would be determining the stop losses for each and every single trade. Okay, so for a long position to be valid, we need to have a new bullish or green candlestick from the Delta Volume indicator, and the chained oscillator has to be above the 0 line. Once we have these 2 conditions met, then we are going to go ahead and place a buy order at the close of the triggered candlestick. Our stop loss will be set at 2 times the value of the ATR. Now for the take profit, we are going to be targeting 1.5 times the risk. Exactly the opposite is true for short signals. First, we need to have a new sell or bearish candlestick from the Delta Volume indicator. Second, the chained oscillator has to be below the 0 line. Once these 2 conditions have been met, then we are going to go ahead and place a sell order at the close of the triggered candlestick, and our stop loss will be set at 2 times the value of the ATR. Again, we see that the current value on the ATR is 0.20, so our stop loss will roughly be set at 2 times the value, and we are going to be targeting 1.5 times the risk. But it is important to note that we only take trades if these conditions are met. We don't take a short trade if the chained oscillator is above the 0 line and or if the delta volume signals are indicating the opposite direction. Also, we only take trades at the opening of a new candlestick. Please like the video and subscribe to my channel for more strategy videos. Thanks.